Today is Saturday, January 3rd, and I'm reviewing the price action of ES and NQ futures, the importance of learning a candlestick formation, volume imbalance, and liquidity points. So let's jump in. Last week I made a video where I was talking about the liquidity points and how the market reaches those volume imbalances to use it to expand or contract the price action. So this is the video from last week y de igual manera si observan es curioso, ¿verdad? I was talking in Spanish, but the point is that my expectation is the price reach the volume imbalance over here in this area. But what we see is how the market creates a gap. So it gap up and then runs to this imbalance, but the price got rejected over here, and then the price next day goes to the other imbalance that it created the day before, and then price expands towards to this daily fair value gap. So it's very important that learning to read candles is gonna give you the direction that the market might expand. But to do that, you need to understand the candle formation, how a lower time frame is gonna form the next time frame, and so on until reach a higher time frame. In this case, the month, it could be the 2 months, 3 months, 4 months, you know what I'm talking about. So the higher time frame is formed by the lower time frames, and that's why what we need to make a multiple time frame analysis. We cannot just, if we are day traders, we cannot see the market in the 1 minute or the 2 minutes or the 5 minutes and 15 minutes and 1 hour. We need to have a bigger perspective about the formation in a higher time frame, because once the trend is formed, once the trend is ongoing, is more likely to keep the trend than reverses. So that being said, we need to learn how to read the candlestick formation. I remember back in the days, one of the videos that is the most important, and it's very simple, something very, very simple, but it helps me to understand the candlestick formation. And it's from Jared Wesley, and it's called How to Read and Trade Candlesticks Like a Pro. And I want to play a little bit of this video so you can have an idea, but you can look for this video on YouTube. It's I really like this video because when I was a beginner, it helped me to understand that I cannot just rely on one time frame. I have to make a multiple time frame analysis and being thinking that how the 1 minute is forming the next time frame that I'm looking for or that I like. It could be the 5 minutes, the 10 minutes, the 15 minutes, 20 minutes, anyone. But you gotta understand that the lower time frame, it's forming a higher time frame. But that is not the most important to understand. You have to imagine that candle in your head, because you have to make that analysis quick. How is developing in a higher time frame, or vice versa? Let's hear Jared.
Who's right, who's wrong? Neither. Both. It's just arbitrary, the time. So my point, though, is that on a 15-minute chart here, we had a little bottoming tail. That bottoming tail on the 15 becomes a little red bar on the 5. So a bottoming tail in one time frame is a pivot in another. The question is it a significant pivot? A bottoming tail in one time frame is a pivot in another. Okay? Just because the clock ticks from 4 minutes to 5 minutes and a new bar forms does not automatically make it a new area of support. A lot of people think, oh, the bar finished, so now the previous bar's low is some level of support. Why? Why? Think about what I'm saying here. See, let's go over to the left-hand side for a second. Bear with me, okay? If I lose you, let me know. I shouldn't. It's pretty simple. Right here we have a 15-minute bar. And right next to it, right after it, another 15-minute bar. Guys, what happens when I can't change that one. Annoying. What happens when I go to a 30-minute chart? When I go to a 30-minute chart, doesn't it just kind of look like that? Right? If I went to a 30-minute chart, those two bars would simply be one bar. Yes? So why then should this green line be some area of support? Why? Why? It's just time. The 16-minute chart looks a little different. The 14-minute chart looks a little different. And the 30-minute chart just has one big-ass green bar on it. So why should that be any appreciable level of support? The answer is it's not really. Unless there's some type of battle being tested happening in there, and you can actually go to a lower time frame and see it. But when you go to the lower time frame here on the 15, you drill down to the 5, it's just green, 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 no battles tested. None of these bar lows are any appreciable level of support because nothing actually happened there. Up here, something happened. So now, it tends to look like this. Same thing as the last slide, but we added a 2-minute. The 15 is up, 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 and then we get a little reaction. On the 5, it's one red bar. That bottoming tail is one red bar. On the 2, it happens to be a 3-bar pullback. And it becomes a buy setup. Key point, a battle occurred, which means this area has been tested, confirming who is in control, in this case, the bulls. Okay?
So that being said, it's pretty clear that we cannot rely only in one time frame. So that's why our analysis has to be in multiple time frames, even 1 month, 1 week, daily, hourly. So I want to show you another ideology, just call it that way, another way of think. This is under the concept of ICT. ICT calls this the power of 3, and the formation, it's something very similar to what Jared is talking about. It's just a different type of school, let's say it that way, or they name it differently to the strategy, but it's exactly the same. At the end, it's exactly the same. Let's play it.
One candle can change your life. What I'm talking about here is ICT's power of 3, where If we are overall bullish, we focus on buying below the daily open, which is 12 a.m. New York Eastern Standard Time. And if we are overall bearish, we focus on selling above the daily open. Let's go over an example. Here, we're overall bullish, so we need to look for a setup below the daily open. And to do this, we'll use ICT's 2022 model. So here, we've taken sell-side liquidity below the opening price and broken structure with displacement. Now, we'll enter on a retracement into the fair value gap. All we need to do now is simply let price expand higher for the day and close out to complete the power of 3. This one candle can change.
Alright guys, it's very important that understand that either strategy is good as long as you start back testing and find those supporting concepts, repeatable concepts that helps you to achieve that objective or goal that you have set before enter to the trade. And why I'm saying all this, because sometimes when the market is open, we want to be like clicking the button, thinking then we see something or we see a pattern, or that we feel, because that's the right word, we feel likely the market is going down or is going up for some reason, because something happened outside the chart, because some political or geopolitical action is taking place somewhere else, and that or thinking start getting cloud for those developments. Like today, let's say for example, what is happening in Venezuela is gonna affect the market, but we don't know how. We need to stop thinking what is gonna be the outcome, if the market is gonna gap down or the market is gonna gap up tomorrow when the futures open. What is going to happen? We have to let the chart to print the direction that it's going to take, and then once we know what is going to be the trend, then we can take action. But it's very important for everybody to understand that if we don't understand how the candle is forming, it's going to be very difficult to achieve success. So I want to show you an indicator. First of all, this is the price action from this week. Give me just 1 second. Okay. Friday, we see that NQ, it took liquidity, the liquidity points from 2 days prior. In the morning, it went up and then it reverses. So if you like the ICT concepts, then I like the ICT concepts because they have a very, very, very high probability and very high precision points that you can read. And that is what I like from ICT. That is what I like from ICT. There we go. So ICT talks about a lot of the quadrants and how the market tries to fill those imbalances or fair value gaps. If you ever heard about fair value gaps, the market tries to fill and there's a lot of precision on that, on those concepts. That's what I like them. But like I say, it's very important to understand the candlestick formation. So all these moves represent this candle. So in this area is where you need to find a repeatable pattern when you are bearish, like in this case is the price action was bearish, and try to determine what is going to be the liquidity point that the market is trying to reach. In this case was a previous day low, and it went lower, but this is a good starting point. It's a very good amount of points. So this is what we're seeing here, but in a bearish form. In a bearish form.
Your life. What I'm talking about here is ICT's power of 3, where if we are overall bullish, we focus on buying below the daily open, which is 12 a.m. New York Eastern Standard Time. And if we are overall bearish, we focus on selling.
Can you see the bearish example? I want you to see the 1 hour time frame. It's not gonna be 100% exactly. It's not gonna be 100% the same, But the concept, the idea, the main idea is that is running higher, reaching for the previous day high, and then when the market opens at 9:30, it fakes everyone that it's gonna go higher and then reverses aggressively. Now, this is candle formation. This is what you need to be 100% aware all the time. What is the market trying to reach? A lower imbalance, an efficiency, a liquidity point, because we have a negative catalyst, data information, or Trump came out and say something. Something is making the price go lower. Now, when we start looking for footprints, can you see how all these bars, they small, they're crawling up slowly up and then reach the previous day high? But can you relate that all these bars, they are in the overnight session when there's no volume, when it's very slow? So at 9:30, the bars, the candlesticks, they go huge. And I want you to see something else. Then it's, let me change it. Okay, here. See how the volatility goes up at 9:30, and at 9:30 the market retraces. It went down and then went up, but the second bar, it's going up and it's pulling back. And over here, look, when the volatility goes up, the market goes down, and when the market goes down, the volatility is gonna be totally inverse. So we have to check multiple factors when we are doing day trading. Otherwise, we're gonna fail, and it's gonna be very difficult to understand the moves. So now, because I follow ICT and its concepts, I have to read the market through multiple time frames all the time. This is a must. We need to watch candlestick formation videos. That video that I show you from Jared is how to read and trade candlesticks like a pro, and the other one, it's Power of 3 from ICT. And this is going to be very important, because once you understand this, it's going to be very, very, very easy to understand the ICT concepts, because ICT trades in the 1 minute time frame. I wanted to show you this just to give you a bigger idea or a bigger perspective about the candle formation. This indicator is going to show you the candlestick that it's forming on the daily, but this is the 1 hour time frame. Let's see. I want to replay so you can see how this forms. So let's play it. This is the previous day session, and this is the current. But see how the daily candlestick is forming, and this is how it shows in the 1 hour time frame. This is another day, another session. You see how at some point this candle, it was super green, but if you study the ICT concepts, you're gonna understand that once you start showing signals of reversal, that means that it's gonna look for the other side of the liquidity. $9.30 open. Look, $9.30 open. You can't see it because but here it is. Let me one day. This is the 9:30 open. In one bar, took all this move. In 30 minutes, it took all the overnight players. But like I say, it was a urgency. It was extremely urgent to go down there. So that's why it's very important to understand candlestick formations, because sometimes you don't even have, you're trading in the 1 minute, but you start seeing how the candles start dropping, and you're never gonna find an entry point. You see the candle is the same, it's showing me exactly the same. This is the 1 minute price action, and you see in the 1 minute how it drops aggressively. But if you study the ICT concepts, you will understand that this retracement is the viable. And now if you see key points, price level points that are very visible, where the price retest and then you can take advantage of those moves. But if you don't learn the very basics things like candlestick formation, is gonna be very difficult for you to take advantage of these moves. Thanks for watching. See you next time.